Finally, this is the day you have all been waiting for, the reaction to Friday's US sell-off and Japan's yesterday sell-off. Because yesterday overnight S&P recovering is not so important to you guys who are all extremely bearish on the market because you just want it to crash. But while it is falling and we are trying to discount a news event, you have to understand what I said yesterday, and I can repeat it now, is that news-based events can be very, very different. So on the short term, the news-based event does cause panic for a day or two, but in the medium term, it ends up discounting, especially when it is a known news for quite some time. Just like I gave the example of Brexit yesterday, now when you know about tariffs for the last 1 month, you have already discounted it over this period of time, and the final panic that you're seeing into the news is just the last shakeout. And so usually that's the time, if you're short, you think of getting out, and if you're a buyer, you see it as an opportunity to really get in. Will the news itself cause the panic? The answer is probably not, except for some intraday swings on that day. You might just see it as the turning point for the market. In fact, unless it's really a bear market, like it was like the Lehman crisis, right? The Lehman crisis, it was inside a bear market, and even that didn't cause a crash because that day there was a bailout of $750 billion. The market bounced back to retrace 61%. Now, if you thought the bailout was the reason for market to bottom, that also didn't work. 61% it hit, and then it crashed over that for the rest of the month because the larger trend was down. So understanding the larger trend becomes a very, very important part of understanding how markets are behaving and why they are behaving in a particular way. So they react to news based on the underlying trend, but the larger trend always takes over. So to understand the larger trend is why I have written the long short report over the weekend. If you have not read it yet, go out to indiacharts.com, subscribe, and read that very long short report. It's not a long, it's not long short doesn't mean it's short, and it's not long. It really talks about the direction of the market in the coming months and why, discussing the macro, domestic setup, Elliott wave counts, sentiment indicators. All of that is what we look into to come up with that view so that we can stay on the right side of the trade. They're always short-term trades, but what is the big picture? What should we really do from a 1 week, 2 week, 1 month, 2 month perspective? And that's really very, very important. So do go out and read it. And in the meantime, this is a news reaction, and therefore it's not going to be like a trending move, except it's creating that short-term shakeout, fear trade in everybody's mind. But you know what to do with that if you're mentally trained to deal with these kind of things. So see you all next time. I hope you get this one right.